Yes, it was a good bounce yesterday. We're pulling back today a little bit, but we're still in this pattern formation. It is a bearish pattern formation, meaning that the chart is telling us that there is a slightly higher probability to downside still.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
What interest rate are they going to have to do? Essentially, this is debt that's going to be rolling over, that they have to essentially refinance. So you're taking debt that was probably at a 1 to 2% interest rate. You're now looking at selling it to the public or to the world at around a 5% interest rate. So think about the U.S. deficit and what that's going to do to the U.S. deficit. By the way, there's a reason why when they passed the debt ceiling, there's no cap on it right now. For the next 1.5 to 2 years, no cap whatsoever, because you have all these factors here going on where they have to unload a ton more debt to keep the merry-go-round going. So now you're talking about how much is going to be sold to the world, and then what interest rate is that going to be at? And again, is that a headwind? Well, I would think so. Then you take into account, and I had a great Spaces last night, verified Spaces, by the way, every Tuesday night at 7 p.m. We had an amazing group of experts on last night. We were talking about the commercial real estate market and what a massive, massive collapse that could be. So ultimately, that's coming later this year. We know the banks are already stressed. We know banks have failed already. Now you throw into the mix the commercial real estate crash. Now you go back to the Fed saying, hey, listen, we're going to have a mild recession. And I said this before when they said this, as soon as they say mild, I get scared. I get scared because every time they say something, it's never what they say, it's always worse. You could go back to 2007. Oh, it'll be, a minor correction, real estate will correct. That's fine. Well, look at what happened, the Great Recession. We had massive downside in the markets, collapses every which way. You go back to transitory inflation. What did that turn out to be? So everything they do, there's always this miscalculation. Whether it's hopium on their part or not, it's miscalculated. So you have to say to yourself, all right, if we are going to continue to see this economic data, now jobs have been staying strong. That's the one positive in this overall picture. But the other side of it is the other economic data is absolutely weakening. So again, when all is said and done, you look at the second half of this year, I have it priced in number one. By the end of the third quarter to fourth quarter, we will be in a recession. The stock market by the third quarter, which we're getting close to, right, will be putting into an effect essentially where we're going to be, the stock market will start to price that in. All right, all it's going to take, especially with the VIX at these levels. In fact, let's go back to the charts. I want to show you this VIX. All right, we're going to look at this. All right, so if we go to the CBOE Volatility Index, the VIX is trading at 14. All right, basically touched 13 this morning. If you go back in time, we are still at the same levels on the VIX that we were in 2021. Now, to me, this is a negative divergence. And you say, well, why is this a negative divergence? And the answer is this, and think about this, right? The negative divergence is that people are acting like this is a new bull market, but we're not at all-time highs. So last time the VIX was at 14, we were at all-time highs, crypto was at all-time highs, the stock market was at all-time highs. Now, we're basically at those same levels on the VIX, but the markets are lower. Again, that's a negative divergence. So that has me concerned as well. It's essentially people being as euphoric as they were at all-time highs, but we're not at all-time highs. Essentially, people are getting conned into this belief by the psychology of the market. All right, so then take it a step further and say, okay, well, if that's the case, what happens when the VIX spikes? What happens when something occurs? What happens when the government tries to sell $1.5 trillion to the world and some of the world says, no, we're not going to buy this. This is ridiculous. We know that there's a de-dollarization going on in the global picture. Then all of a sudden, the U.S. has to start offering higher interest rates. You start offering higher interest rates, what's that going to do? You're now going to raise overall interest rates even more. Now you couple that with inflation, which is showing us that it's sticky, right? So inflation is coming down. It came down beautifully from 9% to 5%. It's now getting harder. And I used this analogy before, and I think it's a fantastic analogy. All right, I'm go to the gym. I work out, I drop a few pounds, I'm feeling great, I lose the first 10 pounds really easily, maybe next 20 pounds, whatever it is. Now I'm at a point where I say, okay, I just want to lose a little bit more and get my six-pack. The answer is, how hard is that to do? That's the hardest part of training, is that last little bit. That's the way inflation's going to be. And so you have all these people talking about deflation. That's not going to happen. And I'm going to tell you why. It's not going to happen because the reason people are making more money is because the general wage got raised. We know people that were making $12 went to $25 per hour. All right, that is going to be sticky. You can't start reducing people's wages. Once you set them at $25 an hour, you can't bring that down. That's going to keep inflation sticky north of 3%. With it north of 3%, ask yourself this: when the heck is the Fed going to cut rates? How can they cut rates? And you might say, well, oh, they could cut rates, no big deal. Well, if you're at 1.5% and you raise and inflation jumps to 9%, now if you start at 3, where is inflation going to top out? 15%? How are we going to feel about that? I don't think the Fed wants to do that. They're going to be very reluctant to lower interest rates. Now, right now, markets, are they pricing in anything like this? And the answer is absolutely not. All right, so those are a couple things. Now, I want to get to Bitcoin, right? I want to talk a little bit about Bitcoin here. Bitcoin having a beautiful reversal yesterday. So essentially, you have to understand the metrics going on. 2 days ago, the SEC sued Binance, and they levied some really serious accusations. If these accusations are true, that's cataclysmic for the crypto markets. Now, what I find fascinating here is you essentially have a market that yesterday rebounded and negated that move. Now, to me, this is an interesting dynamic, and I'll tell you the dynamic that honestly makes me intrigued, is that you have a crypto investing public that essentially is saying, no, we don't believe. The SEC has lost credibility to the point that when they say that Binance was doing shady things with funds, we're not going to believe them. Because if this was true and Binance ultimately collapses, the detriment to the crypto markets would be massive. All right, so you have investors that are coming in and saying no. Now, granted, yesterday the SEC sued Coinbase. Now, remember, there's a difference here. The Binance stuff, the allegations were really bad. Coinbase, the SEC was just saying, hey, you're allowing people to trade unregulated securities. That's nothing new. We knew that already, right? The SEC had already said that, hey, listen, the crypto, everything but Bitcoin's essentially a security. Okay, well, if they already said that, then yeah, you're right. Coinbase is letting people trade unregulated securities. So I think that's one of the keys, is also when people started to realize that, that's when they got to a point where they said, all right, shorts started to cover, you saw a little push up, and now we're popping up. Now, but if we go to the charts here, what I wanted to talk about here is the chart basis. What is the chart telling us? Because that's all news. And you guys know, yeah, I pay attention to news. I think even technical analysts and technicians need to know what's going on with the news. But what we need to do is say, what is the chart telling us? And the chart's very simple. The chart is saying that right now we are holding this area of support. And I want to draw a trend line in here. As long as you hold this general area, and if I put a line through this low right over here, we can clearly see that we closed that down day on Binance right at that level. We then rallied back up. So we're stuck between a range. Now, this is your upside resistance, very clear right here. This is your downside support. If support breaks, we're going to 24,000. That's your next target. Excuse me. All right. Now, if we go to the upside, this is your resistance. Now, if we get over this 28.3 level, we're going to head back to 30,500, which is the top. And I called that. And again, lots of people were doubters. There were so many haters out there talking about, oh, 30,500. It's now a breakout. It's going to 100,000. The charts are the charts, folks. I go with the probabilities. Everything I look at is always based on probabilities. There's no emotion. There's no nothing. It's what are the charts telling me? I translate that into probabilities. The bottom line is, if we go back to the chart right now, yes, it was a good bounce yesterday. We're pulling back today a little bit, but we're still in this pattern formation. It is a bearish pattern formation, meaning that the chart is telling us that there is a slightly higher probability to downside still. What would change that? If we get above this 28.3 level. We get above 28.3, it opens the door to retesting the highs. The highs would be resistance. but that at least would open the door to it. And again, this is just, it's unbiased. It's just, that's what the charts say. You can be one of those people that lives on hopium, that's fine. Or you can be someone who is a realist and a logical thinker. Those are the people in general that will make money in the markets. All right, I want to show you the Ethereum chart here, guys. Excuse me, I got a little bit of a cough. The Ethereum chart, by the way, you're stuck within parallels. Now, parallels are one of the most powerful things out there. If you find parallels, you will find parallel after parallel after parallel. Look at this. So we're basically, again, stuck in this parallel between these parallels, bouncing above and down. We were stuck over here in a parallel, and we went up to this parallel up here. Same thing applies. This is a bearish consolidation pattern off of this down move. All right, that means that probabilities for this parallel dictate that there's a higher chance of a move lower than higher in the near term. If we get above this line, then you open the door to go to the next line. By the way, technical trading isn't about being a major bull or a major bear. It's about relying on the charts to guide you. It's about being able to flip when you hit support to go long, when you hit resistance to go short. That is the true nature of it. And again, it's very hard for us as humans to understand that because we are emotional creatures. We get in a trade, usually with too much money, and we become very invested in the success of that. We dream about the millions of dollars we can make. But ultimately, that is the downfall of 99.9% of investors. They fall in love with something. I always say this to my traders, folks. Only love things that will love you back. If it loves you back, go for it. In general, is a chart, is a stock, is a crypto going to love you back? No, absolutely not.